This content is brought to you by Uphold, which is a great platform that makes crypto investing easy. You can buy, sell, trade, and earn cryptocurrencies on Uphold. They have 10 plus million users, over 200 plus cryptocurrencies, and they're available in 150 countries. I personally use this platform since 2017. They're one of my go-to exchanges. They also offer equities and precious metals that you can invest in. If you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Drew Forman, who's the managing director and head of Cowen Digital. Drew, great to have you on the show.
Hey, thanks, and really great to be on here.
Drew, we are connected to Jack McDonald and the folks at PolySign and Standard Custody, and we'll talk a lot about that later on. I would love to get to know you a bit better, though. Tell us about your background, where you're from, and where'd you grow up?
Yeah, absolutely. And I've been actually watching your podcast on YouTube, and congrats on the success so far. Ever since you had Jack on, he's a good friend and good partner in the business. So my background, born and raised in New York. I'm living in Bedford, New York, and, we work in Stamford. Cowen Digital's headquarters is here in Stamford, but travel around to all the conferences across the US and internationally.
And what did you do before working at Cowen?
So most of my career was actually in derivatives. Previous to Cowen Digital, I was running the derivatives team at Cowen. So equity options, risk arb, and ETF trading. And in 2020, batted around the idea of trading Bitcoin options, and that quickly grew into Cowen Digital. Prior to that, I had worked in derivatives at JP Morgan, and before Cowen, I was at a startup called Macro Risk Advisors.
And what was your first encounter with Bitcoin? And what was your aha moment?
I've actually been interested in the space since around 2010. I read the Bitcoin white paper, and that sort of just 8 pages blew my mind. I think it was a super elegant, interesting solution to a payments tech problem. I've had some friends working at different crypto companies, and actually when Bitcoin on one of the first bull markets from 10 to 100, I caught that wave, bought a few Bitcoin off of my friend, and I wrote him a personal check, and he sent me the secret keys, which I then forgot about and was scrambling to try to find my secret keys back in 2017 when it rallied to 10,000 plus. I think, like a lot of people, I was very close to being one of those lost Bitcoins, but I did find them and have been interested in the space since 2010, 2011.
So you're an OG, man. I mean, you're there early. You read the white paper around the time when it came out. So yeah, you've been here for a while. Maybe not as immersed, but you've known about Bitcoin way before a lot of other people.
Yeah, I think I was really a tourist up until a few years ago, but certainly interested in the space, watching what's going on, looking at some of the other tokens, and really interested in just distributed ledger and blockchain and what the use cases were, as well as tracking these financial assets. And I think that's what really got me interested and was the genesis of Cowen Digital.
So tell us about Cowen and Cowen Digital. For those who may not know, I think it's important for folks to get the history of the company and how Cowen Digital was formed.
Absolutely. So Cowen is a 100-year-old investment bank, and you would normally think of that as one of the sleepy players trading credit and equities. But it's really an entrepreneurial place that leans into some of these areas where they can have a first mover advantage. So Cowen is number one in SPACs. We're big in derivatives. Cannabis is a big area for us. And that sort of lent to trading of digital assets. So in 2020, I had wanted to trade Bitcoin options out of our options desk for a couple of years. And during the pandemic, got the go ahead to form the Cowen Digital Working Group and really dig into what crypto could be for institutions. Our customers were certainly asking us for a trusted counterparty, a solution to invest that would be fit for asset managers. A lot of what was out there was either the exchange model or crypto natives that they had never heard of. And as we dug in, we realized the opportunity was massive, but the existing infrastructure was almost non-existent. And we started building and applying for regulatory licenses and really digging into what we could come up with, which is what we launched this year, fully at market, Cowen Digital.
So tell us about the different types of services you provide at Cowen Digital and what type of institutions you work with.
Yeah, so we are essentially trying to emulate what Cowen does across the investment bank and then add on services that are unique to crypto. So on the market side, we really are starting with spot trading. We're currently live. We've been live since March. We're trading 28 tokens. That's both on a high touch and low touch basis. So you can trade high touch with our desk where we can make markets and trade on an agency basis, or you can trade directly through our low touch algos. We're building out our lending, derivatives, shorting workflows, which should be live in the first or second quarter. And then there's also a really large investment banking element. So we're helping early stage companies through restructurings to raise money. And then down the road, we're going to explore asset management and DeFi and see where that takes us. The real pillar of what we're doing is to try to emulate an equities-like workflow for asset managers that's built for institutions. So unlike an exchange where you have to fund with fiat, keep your assets on exchange, trade with the exchange, and then keep your tokens on the exchange, we have always thought that custody of assets and the trading and markets function of assets should be separated in the digital asset space. So we are essentially custody agnostic. We do have a partnership with Standard Custody, which I can talk about later, but that's a minority investment. So our workflow is you trade with Cowen Digital. We're the trusted counterparty. There's no pre-funding. That's both on the high touch and low touch basis. And you can essentially post-trade allocate like you do in equity. So you can buy and sell Bitcoin throughout the day. At the end of the day, you can net settle trades to different accounts, to different wallets, or for different funds. And that's the workflow that our customers have been asking for. And I think it's really resonating in the wake of some of the things that have happened over the last quarter.
And are you working with institutions such as hedge funds, family offices, and so forth?
Yeah, so all of the above. Our initial target audience was the 2,000 clients that Cowen speaks to in other asset classes. So you can think of the largest asset managers, pension funds, hedge funds. What we're finding is that we're also really resonating and onboarding some of the crypto native funds who are able to trade on their own and probably some of them have been around even longer than Cowen Digital, but our workflow, which includes the ability to not pre-fund trades and to post-trade allocate, as well as services like thought leadership and research, global cap intro to help them raise money. We're really interacting with both crypto natives and traditional finance funds.
Tell us about your process. You mentioned that there's 28 coins, if I'm not mistaken. What's your process for adding coins? And are there any concerns given that we don't have full regulatory clarity in the market as yet? What's your process there?
So we really take the crawl, walk, run approach. We started with just Bitcoin and Ethereum, and then in batches have been adding different tokens to our trading list. I think we want to have a very robust coin vetting policy where we look at volume metrics, we look at the different tokenomics to understand how it could be classified. And we really wanted to give investors a range of products to trade. So we have certain tokens that cover the Metaverse, certain tokens that cover payments, certain tokens like Bitcoin and Ethereum that are the blue chips, but all that have the volume to be able to trade it on an institutional level.
And obviously in the bull market of 2020 into 2021, there was a lot of news of different institutions looking to dabble and dip their toes in the market. I'm sure you guys saw a boom at that point. Now we're in a bear market. Are you seeing reduced demand, or is it still, are institutions still interested in doing this?
I think we're seeing a little bit of both. So the bull market was very forgiving, and you saw a lot of, I would call it, tourists press releasing in the space. We're going to hire 100 people for digital assets. We're going to invest X dollars. We're going to build this team, and a lot of, call it, due diligence that might not have been the best case in terms of VC investments and just people entering the space. So a lot of that market froth has gone away. What we're seeing on our side is the institutions may be pulling back a little bit in terms of their investment appetite, but they are all continuing to build. We're speaking to the working groups of the largest asset managers. They haven't skipped a beat. They are continuing to have calls with us and build infrastructure to launch funds, to allow their growth and value PMs to be able to invest when they want to, and to really be able to catch the next bull market from an asset allocation standpoint. So while some funds have pulled back in their actual investments, we're seeing the largest ones still continue to build the infrastructure.
Any names that you can drop, as far as those institutions? I don't know if you can.
No, I can't talk about our clients, but some of the biggest names and a lot of them that you've heard of, they're all building. Some are investing. Certainly, in the years past from the venture side, and now they're all building to allocate to liquid tokens.
Tell us about the partnership with PolySign Standard Custody and Trust. You mentioned there's an investment there. How are you working with them, and are they your primary custodian?
So we are using them as a custodian for some of our activities. The main tenet of separation of duties of trading and custody is important to us. So we are trading into any wallet that our customer has, and we continue to be able to do so. What we wanted was to be able to offer some of our institutional clients a soup to nuts solution where they can combine fund administration, trading services, and custody in one in a workflow that is synergistic. So we made an initial investment in Standard Custody in 2021. We led their Series B round. And then the opportunity, and I think Jack spoke about this, the CEO on his podcast with you, they had the opportunity to buy MG Stover, and we were able to help facilitate that with some really interesting partners on the investment side to help facilitate their investment in MG Stover. So it's really an integrated workflow between fund admin, custody, and trading. But again, it's a minority investment, and we're able to work with a number of different custodians.
Are you exploring adding other digital assets such as NFTs as well as tokenized securities, whether it be real estate, bonds, and so forth, or stocks?
So I think tokenization of everything, for lack of a better word, is going to be a theme for 2023 and beyond. So everything from real estate to NFTs to infrastructure assets to potentially tokenization of securities. And we want to be set up to trade all of this. So right now we're focusing on the liquid tokens, the tradable ones, but we're certainly building out infrastructure to be able to trade tokenized securities. Our clients are certainly asking about NFTs and the trading of that. And I think, on the roadmap is to really dig into institutional DeFi, institutional NFT trading. But right now we're focusing on getting our markets infrastructure in place for the trading of liquid tokens.
And you mentioned that, on your roadmap for 2023, if I heard you correctly, you are going to look into DeFi options. I see different folks are testing DeFi from an institutional level, like JP Morgan and so forth. What can you share there as far as how that would function?
So in terms of a come to market strategy, that's definitely in its infancy, and I don't think anything comes to market in 2023. I think the DeFi space will be very relevant to institutions when there's a KYC use case for them to be able to know who they're trading against. So I could see KYC DeFi pools. I could see different protocols where customers are able to access the DeFi or on-chain liquidity through a Cowen Digital or a trusted counterparty. But these are all in the idea phase that I think as the industry matures, as we see more regulation, we'll be able to come to market with solutions.
Are you currently offering staking options? Obviously, you have proof of stake tokens, whether it be Ethereum and so forth. Do you have that on the institutional level?
So we are able to offer it through partnerships. Since we're not custodying the assets, we're not staking the assets, we're not housing any of that, but through Standard Custody and other custodians, we have partnerships with firms like Figment to be able to offer very good rates and very high security in staking of securities like Ethereum and Solana.
So I'm interested. I personally stake, and we have a lot of retail that do as well, and some of them do it through pools, some of them do it through exchanges. Are these institutions, and I kind of want to get the sentiment, are they like bullish on that, the fact that they can hold these tokens and earn passive rewards? Is that like something that appeases to them, passive income, so to speak?
I think so. And to me, the merge was then very much overshadowed by FTX and a lot of the credit concerns in the industry. But I think in the coming years, we will look back at that event as something that made digital assets have sort of a risk-free rate. We hosted a fireside chat with Raoul Paul right around the merge, and I think he really put it in an interesting light where Ethereum is going to become the main chain where you can essentially have a passive yield on a digital asset, and everything else will be based off of Ethereum. So in terms of building out valuation metrics, in terms of earning yield, especially if we see interest rates come in, I think that will be super important and will cause more investors, especially on the institutional side, to come into the space.
Now, you mentioned FTX, and last year there were a lot of collapses in the market. Do you think that we have to build some more credibility again in the industry, and especially for institutions? And what's your outlook for that? Is it like, okay, after 2023, maybe in 2024 things will go back to normal, so to speak?
I think the price action over the last 10 or 15 days is very promising. We've retaken the pre-FTX levels out. I think we saw a lot of the weak players get washed out. I think we saw some strong players who didn't have the best risk metrics get washed out. And for us, this is great in terms of the competitive landscape. A lot of the weaker competitors who are doing things like uncollateralized lending, which we were never going to be able to do, are out of the market. And I think slowly the market will look towards a much more institutionalized solution of companies with operational security, with risk metrics that are built for institutions. And I think that will allow regulation to come in and the industry to really heal and have a great path going forward.
And what's interesting, last year, despite Celsius and 3 Hours Capital and Voyager and all that, we saw some of the biggest names enter the market from an institutional level. BlackRock, huge. And I was really surprised that they launched a Bitcoin spot trust. And you had BNY Mellon and NASDAQ launch crypto custody. Fidelity continues to do their thing. So it was pretty amazing. It seems that they have this macro view of the market. And despite all these issues, and which we have almost in every bear market, even though this past year was pretty tough, they're still, moving ahead.
Yeah, that's really encouraging to me. I think if you tried to trade digital assets in 2019, 2020, if you were a hedge fund, you probably hadn't heard of any of the institutions that you would have to go to trade outside of Coinbase. Now names like BNY and Goldman Sachs and Morgan Stanley are press releasing every day and getting into the space. Names like Cowen and State Street will only lend credibility to the space. And I think the next leg up has to be institutional.
Let's talk about crypto regulations, because we have some level of regulations in the market, but there's still the need for further clarity, whether a token is a security or a commodity. And what type of reporting standards these exchanges and all these folks need to have. Although Congress seems to be spinning its wheels, and right now it seems the higher priority is stable coins. Do you think this year we see that comprehensive regulations, and it has to include stable coins, I think. What do you think happens this year?
So, and this is also the view of our Washington strategist, Jared Seberg. I certainly think and hope that you'll see stable coin regulation coming this year, and that's welcome. I think that's very important. That'll give credibility to the space in terms of transferring of assets and the way station of tokens on and off chain and on and off exchange. I really hope that we see other regulation and we define which regulatory bodies are in charge of regulating which type of assets. And I think that'll be a welcome change. If you look at the landscape for this year, a lot of the players who didn't want regulation, who were sort of operating in the fringe, are gone. And bringing regulation, especially in the US, will bring a lot of business back to this country. It'll bring potentially regulated derivatives exchanges, the ability to have leverage and lend in a regulated way. And my hope and my ask would be that we're front-footed and we're able to, know ahead of time what regulators we're supposed to speak to and how it's going to be handled.
For sure. People have their eyes right now on the SEC Ripple lawsuit and the impact that could have for the thousands of altcoins out there, and as well as, are we going to get a Bitcoin spot ETF? Because I think these two things are big catalysts. Any thoughts on the Ripple lawsuit?
I don't have a huge opinion. To me, whether or not it's a security is less important than just getting the clarity around what these protocols and technologies need to do to be compliant with the regulatory agencies. In terms of a spot ETF, I would love one. I don't think you see that this year in the US. Certainly, if you look at the discounts and some of the trusts out there, it's saying that we're not going to see it anytime soon. And that's unfortunate. I think that a lot of the other countries who do have spot ETFs are giving access to investors that's protected. And I hope you see one in the coming years.
Yeah, I hope we can see something this year, but to your point, probably not likely given everything that's going on with Grayscale and those folks too. I would love to get your thoughts on, where do you see the NFT market going? We had the boom in artwork and Bored Apes and penguins and all that, but there's a real world application here of digital ownership that goes beyond artwork. And it kind of has almost an endless possibility type of outlook where almost every industry could adopt this for ownership, trust, and whatever else it may be. What is your perspective on NFTs?
I'm super bullish on the use cases and the user experiences of blockchain and distributed ledger, and especially NFTs. I think the word NFT right now has a connotation of profile pictures of, Eminem or Jimmy Fallon with their Bored Ape. I think in 2023, 2024, that's going to change to the real world use cases, from payments, from home ownership to consumer goods. I think Birkin bags and Hermes now has an NFT associated with every Birkin bag. I think this will be a way for real large corporations to reach their customer base. I think you'll see NFT type products for tokenization of asset management funds, of housing, of different consumer goods. And I think you'll see some real use cases in the metaverse. You just had the COO of Activision become the CEO of Yuga Labs. To me, that's massive. That's like the LeBron James going to a different league. And with that will come the use cases. If you look at who's using Facebook and TikTok and whatever these Web 2 applications are, and who's playing these video games, no one's looking at the underlying code as the reason for playing them. I think in 2022, 2023, and 2024, you will see use cases where the underpinning blockchain is less important than the actual user experience and use case. And for these to be truly multiple $1 trillion investable technologies, you're going to need the use cases and the user experiences to be better.
Yeah, and it seems like some people are getting turned off because we're still in that transition phase from Web 2 to Web 3, and it doesn't happen overnight. And the technology, the infrastructure hasn't caught up yet. The idea is there, the tech is there, but just the ease of use, and for the certain members of the population to not care about, okay, this blockchain, that blockchain, but it actually works, right? I can easily jump on. And do you think, this is a hard question. It's a 2024, 2025 timeline where we finally get the technology to catch up and people are not making fun of the metaverse via Facebook, right? And it just gets to a place where we have the infrastructure.
Yeah, I totally agree. I think just historically, if you look at bear markets, a lot of the tech is built in the private sector. So what we'll see is things come out that you weren't necessarily aware of, because there's billions and billions of dollars of private VC money, of of companies, big public companies investing in the private space. And a lot of what's being built, because it's a bear market, because it's harder to come to the public markets with these technologies, it's being built in private companies. And ideally, you'll see some really interesting use cases. Activision has, Call of Duty. That type of game would really make sense on a blockchain where, your guns and your assets and whatever you're playing with can be transferable, and where you can earn actual money by playing or staking in game. And I hope that you see that in the coming years.
Yeah, it's fascinating. I just, for some reason, thought about if you have those virtual assets within the game, you could also lend them out and earn passive income that way. Like, okay, I'm not playing this month. Here, I'm going to lend it out for $1 a day or something. I don't know.
Yeah, absolutely. There's no reason, if you have, Air Jordans in a basketball game, that you can't lend them out to someone else to play with them, or if you have a certain sleeve or a gun in Fortnite or Call of Duty. And I'm by no means a gamer, but you can transfer these assets between different games or different systems, but also lend them out and also, potentially earn on them. That ability to an end user is amazing. And you don't see that in Web 2 because it's all controlled by, a single corporation.
So on that note, in Web 3, the idea is users now have equity. They can become shareholders, or I don't know if that's the right word, shareholders, but they could become holders of their identity and also participate in the blockchain networks and get value from that. And it seems like there's going to be a lot of different tokens, and we're headed to that token economy. Maybe Amazon creates a token for their Prime service, and you're incentivized to hold it and lend it and trade it and whatever. Do you see a world of thousands of different tokens, and whatever network you choose to participate in, you'll get a token and you'll be more rewarded and have more equity, if you want to say it that way?
It's certainly possible. I really think that any token controlled by a single company or a single corporation is probably due to fail on the blockchain. I think you will see a lot of different winners and losers. To me, Ethereum stands out as, the one chain and Ethereum scaling solutions that are here to stay. But there's certainly a world where a number of layer ones and a number of Ethereum or what other layer ones exist can win. And I think this whole space is so nascent that it can grow together, and there's still trillions of dollars of realized value for these essentially tech companies to perform.
So in line of the thoughts that we were just discussing, what's your outlook, not a price prediction, for the next, 5 years for the crypto market and industry? This is a hard question, of course, because, we don't know what the future holds, but, what do you think we might see in 5 years?
I think I'm super bullish on, obviously asset prices, but just the use of distributed ledger and blockchain in everyday life. I think when you buy a can of Coke in 2027, there will be an NFT associated with, and Coca-Cola will be able to interact with their user base and understand them a lot better with that technology. I think, there will be search engines and video games. There's no reason that consumers can't have control of their data and what's going on with it and earn some of the money that is essentially all going to these Web 2 companies in the public sector. So I don't know exactly how it plays out. I think, my boss always says, you always overestimate what you can do in 1 year and underestimate what you can do in 5 years. So my 5-year roadmap is blockchain will be underlying everything.
Do you think we're going to see more countries legalize Bitcoin, kind of what El Salvador did and made it a legal tender? And also, do you think central banks will eventually start holding Bitcoin as digital gold, as in addition to the regular gold?
I think I do. I think you'll see a few nations this year adopt Bitcoin. The steady state down the road, I don't know if that Bitcoin is the one that will be adopted by every central bank. I think it could be a stable coin or a central bank digital currency, but I think just the ease of use and the ability to transfer assets 24/7 will lend itself to governments and countries using tokens and blockchain for their holdings. I don't know if that end state is Bitcoin, but I certainly think right now that's the one, that's the largest market cap. That's the one that countries will be going to for the foreseeable future.
Yeah, personally, I look at it as, to your point, like Bitcoin's not great for moving money at all, right? With transaction fees and speed and so forth. But as a store of value, as if you were holding, regular gold, but I don't use gold to transact every day. I use cash. So it could be folks are using stable coins to transact every day, but in the same sense of the store of value as we have regular gold, they're holding it as a hedge. And maybe central banks do that, but we'll have to see how things play out.
Yeah, absolutely. I think as we saw with inflation, gold didn't perform as a lot had expected. It didn't have the performance in an inflationary world that one would have thought. Bitcoin has had moves either way in an inflationary environment, but I do think that in terms of the larger market cap, Bitcoin, Ethereum, blockchains, that's an entire new value proposition. So with Ethereum being proof of stake, you have just the plain tokenomics of earning a yield and being able to ascribe some multiple to the token. But then you also have the use case of a means of payments, and then the other use case of the store of value. So if you look at all three of those together, you get valuations that are much, much higher than now.
Yeah. Definitely bullish on Ethereum. We're currently staking. And it's amazing what the possibilities that things can be built on Ethereum. Quick question about CBDCs. They're coming in hot and heavy. Every central bank is working on this. They're gonna looks like launch on different blockchains. They're piloting on different platforms. What are your thoughts? I have concerns from a privacy standpoint, but I do think there is absolutely benefits to money being tokenized and helping people who don't have access to banking and financial institutions and just a instant settlement, faster movement of money and so forth.
I would agree. I think as long as CBDCs and stable coins aren't too heavily favoring the lack of privacy of the user and the ability of the government to essentially take them away or transfer them, I think it's welcome. But like you said, the devil is in the details, and I hope they can come up with a framework that really protects the consumer, but also protects the ability for these emerging technologies to continue to build and provide wealth to these nations that are spinning up these ideas.
Do you think CBDCs will be beneficial to crypto, given that they are running a blockchain? The governments are going to educate people about it when they distribute it to them. I personally think it will, because you're breaking that trust barrier down and helping people understand tokenization. But what are your thoughts?
I think so. Obviously, it depends on the path and how it goes, but the ease of use and the trust in the system, still today, even though it costs you a lot of money when you use your Visa card or you have your access to your checking account that pays you nothing, you're not worried about it being stolen. And the digital asset industry really needs to bring back faith in your assets being there, the ease of use, like you don't lose your entire life savings if you forget a password or if you type in the wrong address. I think all of that needs to be addressed. And once it is, you'll have, adoption go from the billions to potentially trillions.
Drew, pleasure chatting with you. I have some wrap-up questions here for you. First would be, if you could create your own metaverse, what would it be about?
Wow. I'm not on social media or these apps. I tend to think like the Facebook metaverse is pretty stupid. I think that augmented reality and allowing people to exist in their outdoor spaces is coming to market and will be super important. I'm excited about it. But, I think a metaverse where people spend their entire days in and that's the only place to interact is not going to be one that I'm excited about.
But there wouldn't be any place that, okay, Drew would escape to, like put on the Oculus and where would you go to?
Yeah, I guess like some Westworld type scenario where you can be somebody completely different, or a Ready Player One would be super exciting, and I would definitely participate.
For sure, for sure. Get some rapid fire questions here for you. Favorite food?
Favorite food? Yeah, I'll go off the path here. I was just in Tel Aviv marketing, and I'll go with hummus.
Favorite musician or band?
That's a tough question. I'm going to go with my desk here because we actually have a few guys older than me, and then we have a bunch of really young 20 somethings, and I'm going to give a shout out to Eric Rose and my other partners and say Fish.
Nice. Favorite movie?
Inception.
Good one. Favorite book?
I would say the Three Body Problem trilogy, science fiction, but it's the best.
And when you're not at Cowen, what are you doing for fun as a hobby?
So I've got a 1-year-old and a 2-year-old. So when I'm not working and they're awake, I'm with them. But in the mornings I grab some time at the gym, or we'll do cryo or some meditation, and at nights like to go out to dinner and hang out with the family.
Awesome. Drew, once again, pleasure, my friend. Thank you so much for joining me.
Thanks a lot. This is a great time.